Hi and welcome to Traders Community on a coming to you from Texas on a Sunday afternoon. We're going to go through our market weekly and talk about the stock market component. So if you have your market weekly either online or in your email, it would be useful to read along with it. So we can go through the actual, we'll have a little bit of a description, obviously what happened, but the main thing is to share with you what we're seeing on charts, what we're seeing technically. So it was a wild little week, wasn't it? Really, the silliness started just over a week ago when the new variant of the virus broke. We also had a Fed meeting where Chairman Powell made it clear that he wasn't going to change his taper or inflation outlook because of the virus. He also went from a transitory inflation to what he's now calling a persistent inflation. Roll forward to the next week, we then had Mr. Powell up with Ms. Yellen before the Senate, and from that point, he was even more... So the virus at this point had happened, and that's where he then introduced the variant, and that wasn't going to stop him. This caused a lot of selling in the market. Up until, there was a lot of, a breather came about as the jobs number came out. That came out as not a threatening number. The NFP was lower, but there was a lot to strengthen it. Not long after that, however, Bullard, who's your resident hawk over there in Fedland, came out with basically, we got a raise yesterday, the usual stuff out of that guy. But what that coupled with a stronger services number and a stronger factory number, and don't forget, a nervous market in the background. And a lot of people are still out. This is now the Christmas season. We've just come back from Thanksgiving, so there isn't the depth there. People are just putting back on their positions. Now, as far as markets go, there's a lot of excuses out there, just the way people are these days. It's always someone's fault, never their own. But let's be clear, when we look at last week's performance, the S&P barely fell, right? The Dow and even the Nasdaq was only down 2%. But so what really happened collapse-wise, it wasn't the end of the world. It was individual stocks that were way. How many ways do I have overbought? I mean, just go through all that tech and some of the biotechs, particularly technology. So we had DocuSign down 40% overnight, just on earnings. There's a lot of these stocks. Secondly, that's the Russell Index, is reflective of the most speculative end, the people wanting bang for their buck, they're borrowing, etc., etc. And if we look at this chart below, you can see the strength is in the 25% of stocks that we always talk about, Apple and its brethren. But as we can see here, the S&P has been the strongest by far, and the least volatile, right? Now, if we come down and look at the purple, which is the NYSE, that's been a laggard, which tells you the breadth has been lagging, which then also tells you that the Russell, which isn't represented here, these are the major index, is also the most vulnerable. Moving over to Europe, different story, right? Everywhere was up there except for Germany was down 0.6 and Spain got hit pretty hard, 1.9%. A lot of these are, remember, different domestic situations. But the key is not the same selling we saw in the US. Not to be unexpected, given they weren't as high flying, and the Fed is the US and it's not the ECB. Over in Asia, Japan was weak again. Different story though. We had the South Koreans, the Indian and the Chinese markets all up a tad. Japan, remembers, going through some different things with new leadership, etc. Over in the emerging markets, which is interesting. You're seeing a dichotomy, that's a difficult word, between the emerging and the majors. So we had all the markets up that we watched there. Russia, Mexico, Brazil, and Turkey. Turkey is the outlier, but don't be mistaken that that's a great thing. That's because their currencies absolutely collapse, so their assets are seen as bargains by many. As far as the biggest winners last week, a lot of them are healthcare stocks, as you'd expect. When we've got the virus back in the news. Earnings-wise, we had Marvell, which is a semi. So that makes me laugh a little bit about the chip crisis or supply crisis. How come some of them are doing wonderful? Because they got good management, they planned ahead, etc. A little bit lucky, perhaps. The worst, you can see DocuSign, Zoom, same players, Moderna. If you recall, one of those sell-offs came when their CEO was out at night saying that their vaccine wasn't going to be able to handle the variant. I'm not sure how he knows that. and probably not good selling. Okay, let's look at technically. So this was a textbook as we've been playing through. So most of our members have either done very well or at least avoided the destruction. So we saw 5 waves complete. It basically comes down to whether you're a bull or a bear. If you're a bull, this is a question of 5 waves of a degree. If the 1 of 5 is your most bullish case, so I'm saying, we're going to the moon. Which, who knows, when greed grabs hold and printing money, etc. So you have to respect that. The most bearish case is this is complete if, either of a 3 or a lower degree, or the 5th of the whole thing, which I know lots of people are out there calling for. On the downside, once we had, and remember, we look at different components. You've got your Elliott wave, you've got your Murray math, where we spat 8/8, we couldn't get to plus 1/8. Then we got our Ichimoku, where we came down and retested Tenkan and finally gave it all up. We built this little pennant off 50, and look at how fast it, just no support whatsoever on Tenkan and K2. Now this is the S&P. So if you've got that kind of selling, everyone's too much one way, obviously. We came down, and by the end of the week, we'd retested the Tenkan, which we saw right on the jobs number, which gave us great selling on Friday, which you can hear about on one of our other podcasts where we discuss it. And then we came all the way down to test the lower end of our median line or Babson line, just short of the cloud. So there is still room there. And we closed right here. Look what that is, right? So we're right at a Murray line. We're at this previous low here. So let's see where we go from here. Now looking a little bit more in depth on the weekly, it's much clearer there, the 5 waves, isn't it? And also we shot over the Chico, which is actually giving us support on the daily. But look how we overshot it on the 5th wave, which we've marked. On the weekly, it actually never recalculated. So it's still at 7/8. And we close the week with a massive hold, or save, you might say. The weekly Tenkan, this trend line, and right around this previous high. So underneath here, all this goes. You've got the Cajun, but look at this for the most bearish situation. That cloud's a lot lower. So we watch that to form. Now, unless this is a B flat, you would need to see a green in here pretty quick. Moving along to the other markets, the Nasdaq did a classic spit of a Spitfire, top of the trail there to complete its 5th, and almost identical to the S&P, which is interesting when we hear they're so different, to close at the Tenkan. Moving right ahead, the worst of the lot. I mean, not much to say about this other than it's a run of the litter. False break, channel, false break, previous high, and no support whatsoever, just straight down. Look at that, 4 weeks of selling, 4 red bars. We managed to hold off a little. We got support around these previous lows and the top of the cloud and plus 1/8. Support underneath here would be 8/8, which coincides with this breakup level. So everything's maths, right? Just keep that in mind and try to leave your opinion behind the door so it doesn't affect your discipline. Now, semiconductors, obviously massive news with the chip shortage, etc. So we're building what could be a flat bottom triangle, which would be the most bearish. See, to bottom, if it breaks out of that, or we're just simply in an ABC, which is what we will see when we see Nvidia. But keep that in mind, and the psychology of the 300 is obviously a big factor at play. Looking at Nvidia, here's that ABC I was talking about. This was a massive run around 200. This is the 4-for-1 split. We've got a gap here, and a gap here. Now, these can all be runaway gaps, right? So, meaning they don't have to be filled. But we have a gap here that is trying to fill. I'm very close. In fact, that looks like it may have filled. So, that's from its last earnings. That's your ABC. Apple, this has been the last to join the party. We had the panic sell from the new variant down here. It went under 160. The market got very short. We know that because it had the lowest vol, and then you had a lot of gamma chasing all the way to here. Eventually it got over 170. That seemed to do it. And then we came with the rest of the market selling to close around 166, 165. Overnight, there was a bearish report from Bloomberg which caused this collapse and give us the 3 waves. Right? So this is either a pennant. Look at the support across here. So it looks like it's building a pennant. You've always, in these kind of markets, you got to respect the possibilities, right? Amazon, this is the one out of the big stocks we've been the most bearish of. Double top's been in play. You've had that gap down there that got filled in. You've just had so much supply overhanging since Mr. and Mrs. Bezos decided to unload their portfolio, or a large chunk of it. So I always think of those two, and Elon Musk with all his sales. That gives you a good indication of how much was soaked up in the market. Now, ARK, which is a good depiction of the total leverage and nuttiness that went over the last 2 years. So just look how far high that got, right? And look how far it's fallen. A lot of that is because it's an ETF, so she had to, the fund had to buy, and now, you know, with people joining in. We have struggled in this large pennant all around the 50 moving average, 50 weekly. We failed, and eventually that gave way, and that's what we've seen in the last 4 or 5 weeks. If it really gets ugly, we really don't see anything to down here technically, other than this support at 80 and 70.5. You would think 90, some of these psychological levels would do something. So that's a good look at the overall markets. We had a lot of earnings last week, a lot disappointed. This week we got a few more of that high overpriced lot. Mongo, Cooper, Stitch Fix, UPath. We got GameStop. That's the epitome of meme stocks and all that. So that's out. We also have some more stable stocks like Costco. IPOs we have separately on the website, so be sure to have a look at that. If you like our YouTube and our podcast, be sure to like it, be sure to subscribe. We're going to try and come out with more and more of these. Don't be scared to ask. You can either hit us up on Twitter or elsewhere, and visit us on the website for the latest news, forums, etc. Have a great week, and we look forward to hearing from you, and seeing you, of course. Good luck. Have a great trading week. Be safe out there.